One of the most profitable times to trade the stock market is when there is a stock market crash, but you have to be more short-term oriented. I'll show you how in just a moment, plus do my regular weekly market analysis. We will do the day trade of the week on SAVA and a market scan in search of opportunity. So one of the best times to day trade the stock market is when there is a market crash. You see, with a crash or with a downward move like we've had the past few weeks, there's lots of volatility and there's lots of emotion. And that is what creates profitable trades for day traders. And so this is a good time if you know how to trade it. Now, there are two concepts that are important to understand. First is beta and alpha. So we have beta stocks and alpha stocks. Beta stocks are the ones that are correlated to the market. So for example, most days, Apple, AAPL, is pretty correlated to what the overall market does. And so in that regard, you have to trade Apple with the trend of the market. If the market's moving up that particular day, then you want to only be looking for buy opportunities in Apple. On the other hand, we have alpha stocks, which are trading on their own story. And in those stocks, you don't have to be too concerned about what the overall market is doing. Now, the telltale sign of an alpha stock is a stock that is trading much more volume than normal. It has attracted a crowd. Perhaps there's a rumor, perhaps there's new information. Something is driving investor interest in that stock. So we call those alpha stocks. And alpha stocks can go up even if the overall market is going down. And so if you have a day when the market is moving down and you only want to be a buyer of stocks, then you would look for those alpha stocks. If you want to short the market, in other words, make money from the stock market going down, then you have to short stocks that have beta, short those stocks that are correlated to the overall market. Now let's take a look at a couple of examples, one of an alpha stock, one of a beta stock. And we can jump into a chart here. This is an alpha stock from Friday. The symbol is ACOR, and it came alive right here. This is a 2-minute chart. But notice the abnormal volume that traded on the stock all day. Normally it trades much lower volume. So that told us that it was an alpha stock. Now we had a buy signal here on my wave strategy, which is one of my 3 day trading strategies. And it moved nicely from, 63 cents up to almost 85 cents or so. So that's an alpha play. Made a nice gain, but it was able to do well regardless of what the market did because it was trading on its own story. Now, if we contrast that with a beta stock, this is Apple. Now on Friday, although the market's been going down the past 3 weeks or so, on Friday you actually had the market going up. And that's one of the things that happens in a correcting market is you've got lots of volatility. So what you wanted to do with Apple was favor buy signals because the market was moving higher. And so again, with my wave strategy, we look for a break of a downward pullback from a rising bottom. And that happened a few times in the day on Friday. It happened right there, it happened here. And then of course we had nice moves to the upside because the overall market made a gain. Now you can apply this to individual stocks, but you can also apply it to exchange traded funds and exchange traded notes. These are ways to make money when the market is pulling back or when the market is crashing. So things like QID, which is an inverse exchange traded fund on the NASDAQ 100. It goes up when the NASDAQ goes down. SDS, Sierra Delta Sierra, goes up when the S&P 500 goes down. Now, another thing that you can trade is volatility exchange traded notes. These go up when the volatility of the market expands. And it's really a way to make money from fear. So things like VXX or UVXY, those are instruments that you can profit from when the market is crashing. All right, let's get into this week's analysis, starting us off with the US markets. And you can see here we've got the S&P 500, the little mini crash. I would only call it a mini crash at this point because we haven't sold off that significantly yet, but it started back there when the upward trend line was broken from a parabolic trend. And since that time, we've been in a downward sloping channel. You can see that we oscillate up and down inside the channel. We are now at the top of the channel, and we're building a little bit of a rising bottom. And so if this line here can be broken, if we can move up and close through 331, 332 on the SPY, then we'll have a short-term signal of a bounce back. On the other hand, if we get stuck at this line of resistance and roll over on Monday and move lower, then you want to continue to favor a pessimistic view of the market. And that is to say, shorting beta stocks or only buying alpha stocks, because those are the only ones that can do well when the market is moving lower, aside from those inverse exchange traded funds. All right, moving along to the weekly chart of the S&P 500. And what's interesting here to me is that the market managed to close above its open last week. So that's a weekly chart there. You'll notice that we broke this upward trend line. We've pulled back for 3 or 4 weeks. You'll know that I've been a little bit pessimistic the last few weeks. But this week, we came back from early weakness in the week and came back with a nice rally on Friday to close above the open. Now, that's a positive. We haven't broken the pullback line yet, and you saw that on the previous chart where we had that downward sloping channel. So it's a preliminary, very early signal that the market's going to try to bounce back. I think there's still work to be done, but we'll keep an eye on this. We may actually get a rebound next week. We'll have to watch that intraday 30-minute chart closely next week. All right, looking at the Russell 2000, we also closed above the open on Friday. You can see the little green candle there, but we're still below the downward trend line. We still have falling tops. We don't have rising bottoms. What we want to see, and if we go back to June when we had this pullback, we want to see the build of a rising bottom and then a break of the trend line. So here we have a downward trend line. We need to build a rising bottom and then break the downward trend line before we can get too optimistic about the US small cap stocks. On to the Canadian markets, and here you have the Canadian TSX 60 index, symbol XIU, and you can see that it is still in a downward trend, but we are starting to build some rising bottoms. We're near the top of the channel, so much like the S&P 500, we are seeing a market that is flirting with, it hasn't broken yet, but it is flirting with that downward trend line. And if it can break the downward trend line from these rising bottoms, then we might get the start of a bounce back that will take the market back to the highs. Until we break the downward trend line, don't get too optimistic, because we could very easily just roll over and head lower again next week. But it's a critical time because we are at that line of resistance. Looking at the longer term chart, this is the weekly chart. You can see similar situation where we broke the weekly upward trend line, but we managed to close above the open last week. We do have a falling top here that worries me somewhat. Unlike the S&P 500, where there is no falling top on the weekly chart, the Canadian market is really lagging the US market, so I think you need to be a little more cautious on the Canadian side. Looking at the TSX Venture, we had a little bit of a breakdown last week, largely because the price of gold went down, and so the mining stocks that make up this market heavily also went down, and that's a bit of a negative signal. I've been somewhat cautious on the TSX Venture because we did break the upward trend line back there. We've been going sideways for a while, now starting to break down. So I think some caution is warranted with those mining stocks. On to currencies. Here's the US dollar, and this is one of the reasons why gold went down last week, because the US dollar went up. Or perhaps the US dollar went up because gold went down. Doesn't matter if the tail is wagging the dog or the dog is wagging the tail. What matters is that we're starting to build some optimism in the US dollar, and I think it should continue higher to perhaps this level, and then the next level of resistance is here, and that's going to make it a tough go for gold. We'll talk about gold in just a moment. The Canadian dollar tends to move opposite of the US dollar, and you can see that here. The upward trend line has been broken from a little falling top, and so we've had 1, 2, 3, 4, 5 months of upward trend in the Canadian dollar. It looks like that's over short term, and we may just go sideways for a while or see more of a pullback. The next level of support is down around there. Moving along to commodities, and here is the chart of gold. And you'll know that I've been a little cautious on gold. Why? Because the trend went parabolic, and then we broke the parabolic trend, and that means we're likely to come back to the linear upward trend line, which is right about there. And so we had a bit of a rough week last week, but there's still not far to fall before we hit support. And so I'm not yet ready to say that gold is over. I think it's certainly done short term for a little while, and it's been that way for over a month where gold has languished. And I think we could see another negative down week this coming week as we move closer to that upward trend line. But until the upward trend line is broken from a falling top on this weekly chart, I'm still long-term optimistic about gold, just short-term pessimistic. Looking at the price of oil, we had a little bit of a sell-off 3 weeks ago and then a little bit of a bounce back. We're in basically a sideways trading range. There's not a lot of action. You can see volume is low. Oil is boring right now. On to the fear chart, and despite the market's weakness the last little while, we haven't really seen an uptick in fear. And that's why I think more than anything what we are seeing in the market is a pullback in those large cap technology names. Apple, Microsoft, Tesla, Nvidia. These stocks did very well through the spring and into the summer, and they're giving back some of those gains. But the broader market is not too bad, and so I'm not particularly concerned yet. Of course, I'll change my opinion if we start to see this tick higher and if we start to see the market breaking those upward trend lines. All right, so my ratings then on US and Canadian stocks. Long term, I am neutral. Short term, I am bearish, but that bearish could change if we get another good up day, because that will break that short term downward trend line. Gold, bullish. Long term, still. We are still above the upward trend line, and neutral short term. We are nearing some support where gold may bounce. Oil, bearish long term and neutral short term. You know, the market rebounded well on Friday, and that puts it at the verge of breaking that pullback that we've been in since the start of September. What we want to watch for is a break of that downward trend line on the 30-minute chart, as that would be a cue that it is time to be optimistic again. Could happen as soon as next week. Now, gold is weakening and oil is stable but relatively boring. Fear moderate, not really moving much higher on fear. All right, now let's take a look at the day trade of the week. And this is always just an example of the kind of stocks that we day trade on Stockscores Active Live, which is my service where you can watch my algorithm running all day on every US stock, looking for those stocks that have good trading setups. And one of the things that we do is look for something called action candles. And this week, we're actually going to use the same stock that we used last week, because it again on Friday gave us a good buy signal. So let's jump into the chart. And this one actually gave multiple buy signals. First of all, it made its action candle right there, which was breaking from some sideways trading, and that was great. And that is what we call our day trader strategy. It also broke a pullback here from a rising bottom, which is another strategy called the wave. And then my third day trading strategy is called a superhero, and it broke out right there on a superhero setup with strong volume, breaking from an ascending triangle. So it gave lots of opportunity to make money on it. Now for the economics, we'll use the first entry signal. For $100 of risk that you were willing to take, you would buy 580 shares. That was just under $6,000 in capital, but of course, we can margin these things 3-to-1, which means you have to put up $2,000 of your own money to take that trade. Now, by the end of the day, it was up 6.8 times risk, which meant that for every $100 risk, there was $688 of profit. Now remember, that's at the close. It actually hit almost 12 RR during the day before the end of the day. Either way, at the close, you had a 34% return on the capital invested, and that is on a simple one-day hold. All right, so now we're going to jump into the market scan tool, and this week we're going to do something a little different. Let's jump into the market scan, and we are going to run the pullback play strategy. It's not one that I do very often, but we're going to run it today because the market's been pulling back. It has the potential to break its downward trend line. So I'm going to show you how this setup works. What we're looking for here are stocks that are in upward trends that have pulled back recently to support where they are likely to bounce. So here, for example, is one of those. I can draw the upward trend line along the bottoms and notice that we've pulled back for 4 days. We're now at support and the stock should bounce and move higher for a couple of days. So Westport looks pretty good for a short-term bounce, maybe just 2 or 3 days, maybe longer. And that's really what this strategy is all about. Looking for stocks that are in upward trends that kind of went up a little too fast and then pulled back to their upward trend line. You can see it here. Draw a trend just along these bottoms here. Sorry, my trend line tool isn't working for me. I'll just try this again. Move down to this stock, blow it up. Yeah, it's not going to draw for me. Anyway, you can get the idea. Draw a line from this bottom across this one, and you can see that's exactly where we are right now. And so the stock should now bounce off of that and move up. Maybe it only moves up to the highs, 4.5, 475, something like that. But still, for a trade where you only hold it for a couple of days, that's a pretty good little trade. And that's really what I look for, is these stocks that are in good upward trends that pull back. So here's one that did this a while ago. See how the trend line would be coming along these points right here? It ran away from the trend line. It pulled back to it, and it bounced. And in this case, it went from $3.50 to $4.50. Now, I don't particularly like it here, and the reason why is it pulled back from a falling top. See how that top is lower than this one? And that tells me that it's losing momentum. So I wouldn't buy this one now. I want pullbacks from the high in that upward trend. And if they made a new high, pulled back, and then bounce off of it, or are starting to bounce off of it, then that's worth considering. Here, CNTY, you can see I can draw a line starting here across these lows. And that's exactly where we are right now. We pulled back from the high. Maybe it'll bounce back next week, especially if the overall market continues to go higher from Friday's move up. That would be maybe $1, $1.50 to the upside on that particular trade. All right, well, that's been the Stockscores Market Minutes for this week. If you enjoyed it, please click on the like video. If you have a comment, happy to read those. But most importantly, subscribe to the channel, and next week, trade well.